What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is March 13th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to not only talk about Bitcoin's continued strength as we hit new all-time highs in price, but outside of that as well, I want to focus in on the altcoin space and talk particularly about 4 key setups I see in the market that are not only tapping into big narratives, but I think have been generally showing broader strength in their price action against the broader market and can continue to do so. And many of which are at a nice discount opportunity for a potential trade setup over the next couple of weeks as the altcoin cycle starts to rip higher. We got a lot to unpack here in today's video, so if you happen to enjoy, consider dropping a like. It's a great way to support the channel, and let's go ahead and kick things off. So I want to do a real quick run through, and then we're going to dive into the altcoins. The big thing I want to emphasize here is that every single time we're seeing Bitcoin dip into our more momentum-driven moving averages, these are the 4-hour, 9 EMA, 21 EMA, and 50 EMA, which I utilize for momentum trades or when things are getting more optimistic, we can see every single time the dips are being bought here. So I think it's again showcasing that the ETF inflows are building a new dynamic in the market here, guys. And again, we can see yesterday, 7,000, back on the 11th here, 7,000 Bitcoin being purchased back on Monday. So this dynamic is starting to really change the way that price action is going to behave. And I think the important thing to understand before we dive into the topic of altcoins is that it's important to understand that we are likely not going to see some huge, massive blow-off move in Bitcoin, but at the same time, we're also likely not going to see such harsh corrections as we had in the past. I think this is kind of the institutionalization of Bitcoin. It's going to reduce volatility. It's going to, again, provide that support as Bitcoin is breaking to new highs where it had faced resistance in the past. And I think that's exactly what we're seeing here. But you're also not going to see some massive parabolic rally the likes of which we haven't seen before. Again, this buildup in momentum is already pretty steady here, and we've had a really nice run up. So don't expect that as we continue climbing higher, it's going to be that same kind of momentum, because it's going to get more difficult as prices move higher. Nonetheless, with Bitcoin continuing to show strength and continuing to garner more market valuation, this is inevitably going to help altcoins. And a big thing I want to explain here is I see some people talking about the Bitcoin ETF only benefiting Bitcoin. And I understand that that is a very reasonable assumption at first, because you essentially assume that all inflows are going to the ETF, and that is true, technically speaking. However, the important thing to understand is that the vast majority of Bitcoin are not in ETFs. So when Bitcoin's price appreciates and some people decide to take profits, they can rotate that into various altcoin positions. Just because their Bitcoin is not in an ETF doesn't mean it's not worth the market price. In fact, it's actually even more liquid and real. It's real spot Bitcoin, which you can sell and then rotate that dollar liquidity into a whole range of other places or directly trade from Bitcoin to altcoins. So I wanted to explain that. Anyways, the key thing here, guys, is that while a lot of people are focused on Bitcoin, we are slowly but steadily getting more and more warmed up to altcoins, because week by week, dominance is picking up here. We're getting back to where we were back in December for other market capitalizations. So these are all other coins outside of the top 10. And I think once you really get that weekly close of a 14%, that's when the momentum kicks in. So we're trying to take upon as much opportunity as we can right now and prepare for that. So let's go ahead and talk about some of the 4 opportunities that we're watching for in the market. The first one is around Bitcoin infrastructure, and that's obviously stacks. Now, some of these names that I'm going to be mentioning here today, guys, may not be total surprises, but I want to talk about why these are the kind of favorable risk-reward setups in the event of an altcoin cycle and in the event that Bitcoin continues over the next couple of weeks and provides that liquidity boost for altcoins. The first thing here about stacks is that it is fundamentally the strongest horse in the race when it comes to Bitcoin infrastructure. There are a whole range of other plays out there. There's Multibit, there's, for example, Zeta Chain. There's a whole range of different competitors in the space, or players that are focused on maybe ordinals or other related infrastructure topics on Bitcoin. But when you're talking about smart contracts for Bitcoin, I think Stacks is one of the most professional and premier players in the space. It's got a lot of trading history here, which is important and vital here to understand how the market is pricing it according to history, rather than something that might have been listed just a couple weeks or months ago, like Zeta Chain. I like working with something like this because what I can see here is that the Bitcoin infrastructure narrative has never been stronger. And unlike back here, when we tapped resistance like we did back here in February 2024, here in March of 2023, and here in January 2022, as well as April of 2021, we are seeing a lot more resilience than what we had back here. Back here, we had a major flush down here and a continuation of the downside. However, if we take a look at the chart here, we can see that there was a clear descending line of resistance that's weighed down Stack's price and its BTC ratio since as far back as October of 2019. And not only was that level broken with the recent rally we had back in February, but beyond that, it has been able to potentially hold that line of resistance as new support. I probably don't need to tell you guys how significant this is. And irrespective of whether or not you like stacks fundamentally or if you're excited about Bitcoin infrastructure as a narrative, at the end of the day, it's a topic people are talking about. The price action is showcasing it here. We've got a huge long-term multi-year wedge going back as far as 2019. And in crypto, to have a wedge of that sort over such a long time frame, multiple years, is incredibly significant. So if this can continue to hold at that range, I think you've got the ability for this to spring up and make a 350% move, right? You're basically entering into no man's land. We have no idea how high this could go. It depends on the momentum at the time, but above all, I think a multi-100% move could still be in the cards here against Bitcoin in a kind of blow off top altcoin cycle, so to speak. Now, it is important to note, to kind of keep things moderate here, the important thing that I have to say, and I'd be kind of hesitant not to share with you guys, is that I'm a bit worried in the near term that when we are getting these rallies here above the momentum moving averages, people are fading it here. So we are basically still coiling between that line of previous resistance, hopefully becoming new support, and trying to get above those moving averages. So until that really happens, I'm not like saying you need to FOMO into this by any means, and we need to see over the next couple of weeks if that's going to prove to be new support, if there's going to be accumulation at that range that'll allow for market order flow to drive prices higher. We're going to have to see how things play out here, but above all, I think that this is definitely one to keep on your radar, and one in which I think is a good safe risk reward bet. You don't have to go on all the small caps when it comes to this. Sometimes it's best to pick the leading horse and just run with it. Next up, I want to talk about Render. You guys know we've talked a lot about Render as well. Render has been a great play. We've talked about Render more heavily back here in January, but we've chatted about Render for some time off of the AI narrative back here since October. And not only has it made great multiples since then, it's gone up about 140% against Bitcoin. But beyond that as well, we've had a really nice fade here over the last couple of days where we started to see Render cool down. And what Render's really trying to do here from a technical perspective is not only did we break past the previous highs back in November 2021, but outside of that, it needs to make that support as well as this ascending line of resistance that weighed down price against Bitcoin here back in 2022, here in February 2023, and in May of 2023, here in December of 2023, and also in February 2024. So we can see that on a psychological basis, on a technical analysis perspective, this is a very important level, one in which we need to be able to hold here, I think, if we're going to make a much higher move. Now, of course, at the moment, I'm watching to see if Render will hold on its momentum moving averages, but history shows me here that it's very frequent when you get these pullbacks that it's going to snap through there, and that actually is something I would like to see in this case. I'd love to get a slightly cheaper entry here on a play like Render. I'd love to see this come down to 1800 and make this mid-range here around 1300, 1400, kind of the new range of support, because that's going to solidify to me that not only is it able to make this ascending channel of resistance new support, but outside of that as well, to make the prior all-time highs new support as well. So again, just kind of imagine a psychological line here kind of going across and seeing, generally speaking, it doesn't have to be exactly there, but generally this range here to see whether or not that can become new support. It may take, again, a week, 2 weeks, 3 weeks for that to happen, guys. Again, altcoin cycles can take time to really fully manifest and play out, but we are seeing the signs of it here. We're seeing the kind of technical setups where these things can start to make even more exponential moves than they have over the past couple of months. So I'm definitely keeping an eye here on Render, not to mention playing into the DePin narrative as AI is continuing to show strength, which we'll talk about a little bit later on when we review equities. We got to lean into that strength, right? Render is likely going to follow that. Next up, I want to talk about Super. Now, this is one that I've had on my radar for some time, but I have to be honest with you guys. I'm going to tell you guys when we're ahead of things, when we were kind of early to the Bitcoin infrastructure narrative and DePin, I was definitely behind on GameFi. And I have to say, as a gamer, I come with my skepticism. I come with high standards. But the major thing I wanted to talk about here is that while I've kind of written off GameFi for a while, a lot of the plays in the market definitely aren't holding up very well. Some of them, again, don't have I think strong enough fundamentals to really stand out and really be able to garner that kind of significant momentum. One play I think does is Super, because Super does have some pretty much near AAA quality games coming out. And that's the kind of thing that will allow for it to stand out amongst the broader competition. Not to mention, irrespective of what you think about the game, I think seeing the price action here is definitely great. Having this kind of monstrous move here and only having a slight fade here and its price continuing to be bought up and see higher lows and higher highs. I know right now we're facing resistance around 2,400 here, but I would love to see this come down, find support. This is one that's a little bit closer to potentially testing for an entry, and you don't have to get it exactly at that price, but I'm watching here because there's quite an alignment here between the potential ascending line of support and prior resistance range becoming new support. And if you can get that, take it to the weekly time frame, you could get a spring up here towards around 3,500 or up here towards 8,200, and even beyond that, maybe even continue if there's really a lot of momentum and GameFi becomes a bigger topic. I don't see it as being one of the strongest narratives in the space comparative to say Bitcoin infrastructure or DePin or meme coins, which we're going to talk about in a moment, but I think it's definitely one to keep on your radar. I like the chart. I like resilience like this. I like knowing that there's been a massive move here, sure, but so far there's not much profit taking, and there's the ability for this, according to history and its BTC pair, to go much higher. Doesn't mean it's guaranteed, but there's a possibility for it, so we keep it on our radar. Outside of this, I wanted to talk again about the topic of meme coins. Now, I know a lot of you probably remember yesterday we talked about Poo as one of the meme coins that we were watching instead that we have a position in, and we made some phenomenal returns on Poo. At the moment, we took out our profits here, generally speaking, around the blue moving average here. As we mentioned in the video, we got to follow our strategy. With meme coins, they're momentum driven, and it doesn't mean that we can't make a re-entry on it, right? Poo is still holding up phenomenally well here. We built our initial entry off the breakout here at around 1,100 points. So it's still relatively strong right now, holding in the pocket. And it's about seeing whether or not it can actually survive the pocket and won't collapse lower and lower to the lower ones or break through, kind of confirming that the momentum is dead. But beyond that, if we can actually break up higher here, then this could have a further continuation as we talked about within the video. So again, keep an eye here on how that's going to hold up, because on the daily time frame we can see in the past, if we look back at previous moves, we had a 50% flush down, but we came down, tested towards that 50 EMA on the 4-hour time frame, and then you got 2 days of really solid continuation, 150% move, a near 300% move. That's the kind of stuff that we're really interested in. So you're really only going to find these multiples of meme coins, but there's a unique catch here about approaching meme coins. And that is that you do not want to put all your capital into them. You do not want to put a sizable, 30-50% of your portfolio into meme coins. It's too much risk, in my opinion. I think overall, keeping it below 10% if you want to play it a bit more aggressive and kind of going on maybe potentially setting some single-digit exposures to some of these plays, I think is definitely the way to go. There is the approach of just kind of buying and holding, in this case, having a bag, having some kind of position in case it takes off. If it's fractional exposure portfolio, that's fine with me. But at the same time, if you're trading with a larger amount, I recommend leaning in to the moving averages for entry opportunities. Down here around the 50 EMA, if there's nice resilience and it holds there for a while or bounces off nicely. And outside of that as well, being able to take profits when you see weakness, when prices floating above and starting to crash towards the 9 EMA. One of the coins that I wanted to bring to your attention is another meme coin we have that we built a position in called Moncoin. Now again, guys, at the end of the day, I'm not affiliated with Moncoin. I don't have any personal affiliation for the project itself or liking of it. At the end of the day, meme coins, again, are speculative. And the big thing here that I like is it's got the long-term price action, exactly like we saw with Poo. We've gotten cleared through resistance here, the highest price level we've had since back here in May of 2023, in nearly a year. And this kind of stuff is what allows for those massive multiplier moves to start playing out. Again, it's all about momentum. It's all about maintaining above those moving averages. And if you dive into the hourly time frame, we can see that Mong is showing all the right signs here on the hourly time frame. After making accelerated moves, we can see, as we've talked about before, that when you start to show weakness with the moving averages, you have fade downs and usually breaks below that 50 EMA. However, we see that as price chops sideways, we were able to recover there. And when I started to see this back on Monday and Tuesday, I realized that I need to keep this on my radar because the long-term technical setup looked great. And beyond that, we were seeing that resilience was continuing to come in, potentially pressing back up towards the other relative highs from here in March 2024 and breaking through that line of resistance in which we built a position. So this is, again, an important thing to keep in mind, guys. While I'm not getting it at the absolute lows, I'm certainly paying a premium versus the guys who bought back here, say, a month ago in early February. At the same time, there's still room for upside. You can't worry about getting in at the absolute lows. You can't worry so much about fundamentals because at the end of the day, meme coins are momentum trades. And if we're being really honest with ourselves, guys, as we talked about in the last video, there's one big mindset shift you have to have. Whether it's super, whether it's render stacks, which may appear as more fundamental plays, at the end of the day, if you're trading, you should care about where you're getting in and where you're getting out. And at the end of the day, a lot of the valuations for these things are out the wazoo. They don't make sense. Stacks, for example, could double in value tomorrow, but its TVL, or total value locked, and its protocols as well as its general adoption as a protocol could remain the same. And that's the important realization that you need to have about markets. Markets are irrational. It's the same here when it comes to equities. And I want to actually lean into talking about that because we've talked about our 4 coins here. We talked about Render. We talked about stacks. We talked about Poo as well as talking about Moncoin. And we also talked about Super, talking about a wide range of narratives. But I think it's important that while we're focused on the microsphere of crypto, we don't lose track of the macro. Luckily, the macro so far is holding up well. Now, again, we're not seeing a massive acceleratory move in equity valuations over the past couple of weeks. However, we are holding up here on our short-term MAs here, whether that's the 21-day EMA pocket or our shorter-term moving averages. We're spending a lot of time above that range. Any dips below are getting bought, and we are far and extended away here from our longer-term moving averages, which long-term is a concern. But beyond that, in the short term, it's showcasing that we're spending much more time up here. The markets are optimistic. And so long as that trend is in play, as we've seen throughout history, we want to ride that wave. We do not want to fight it. Now, I think overall, this has been being mainly led by the AI craze. We've seen, again, a huge recovery here after what to many people looked like what might be an eventual top at NVIDIA. We saw a continued move down here, another 2%. But when we came down to that 21 EMA on the 4-hour time frame, boom, buyers came in up 7%. So I think this thing, as we've talked about in the channel, is going to the big even level. I think it's going to 1,000. We're not that far away from it. So it could be that that's where you maybe start to see some stalling. And it would align, if we look throughout history, with the prior line of resistance, right? Again, we can kind of just draw it here to kind of get an alignment, right? We're already getting up towards that line. So maybe we see a deviation above it, fade down. Again, a lot of people might start FOMOing at that range. We're going to be likely taking some profits on a lot of the altcoin positions. This will probably play out over the next couple of weeks, but I really think we are kind of getting towards the tail end of this here. But we've probably got a good another couple of weeks where things continue to climb like this, and because of that, we can make some phenomenal returns when there's mass hysteria, there's euphoria, there's an altcoin cycle in the market. That's the kind of setup we're looking for here. It's where you can make a lot of great money in a short period of time. You can step back into cash or into BTC, something more defensive, and wait around for the next opportunity. That's the way I'm approaching it here. We can see the same in SMCI, or Super Microcomputer Incorporated. Again, another major GPU play in the market around AI. This is just continuing to hold in those pockets here, not even coming down to the 50 EMA on the 4-hour since back here in January. Sheer resilience and its price action, guys. Got to be honest here. And I understand, yes, this is starting to get quite crazy here and quite parabolic. But at the end of the day, right, with equities, I think you have to be cautious about trading these because they can cap down. They can, they're not always trading 24/7. But the key thing here is that we are going to see worrying signs in equities that will precede any kind of flush down in crypto. So I think equities will lead here. You will start to see some worrying signs here in equity markets before we need to really consider taking profits on crypto. Not to mention, take a look at the US 10-year to 2-year yield. Long term, big issue here. The yield curve is still uninverted. However, it's continuing to uninvert more, which is speaking to the fact that markets are taking a risk-on perspective. We're getting more out the wazoo than we were before. And again, at the end of the day, guys, as a macro trader here, I don't want to take excessive risk down here for the long term. In the short term, so long as this stays here and doesn't start approaching the uninversion period around 0%, again, we can see here that this does precede recessions, and I think that is still going to play out. I think if we think a recession isn't coming in some shape or fashion, or that there's going to be some massive disruption in the economy, I think we got another thing coming to us. But that can take time to play out here, right? We can see the yield curve starts to only uninvert here, even months ahead of a recession. So just bear that in mind here. While it may be more swift this time around, we will be able to see it here. We're watching this multiple times a week, and you guys should definitely keep it on your radar, even if you're not following me 24/7. Definitely keep it on your charts. But we're going to continue to cover it here in this channel, and I'm going to give you my candid thoughts on it as well. Last but not least, I want to talk about oil. Oil, while it's not trending significantly here, again, oil is, I think, one of the biggest gauges for accelerations or deaccelerations in inflation. And I think we're going to continue to watch how oil is performing. Right now, it's holding on the 21-day, and we're really coming into this technical buildup here of slightly higher lows and lower highs. This, again, looks to me like more likely than not, you're going to get a spring up in oil, but who knows? We're going to have to see here. I'd rather wait and not try to place my bets on oil here. I'd like to see if we get a breakout above there. If oil does break out, I'm going to start de-risking quite heavily on a lot of my asset positions. If we break down as well, down to this range on the lower end, and we start to see oil move down, I might feel a bit more comfortable as inflation concerns are starting to be curbed in the economy. So we're going to have to see how things play out. But for me personally, I'm keeping my eye on this. And above all, I'm keeping interested and optimistic in a whole range of different plays in the market that we have our eyes on at the moment that are discount opportunities, that are resilient, that are showing strength overall, and are in the narratives that people are buying. So that's it for today's video, everyone. Thank you all so much for letting me ramble as always. If you happen to enjoy this video, consider dropping a like. It's a great way to support the content we put out. And if you guys are interested to find these kind of trade setups that we're watching the market, if you want to know when I'm getting in, when I'm getting out, when I'm just generally kind of trading and how I'm approaching these things, and some more in-depth market updates, a great community that's also sharing opportunities like this, you guys can check out the dashboard down below in the description. You guys can get 20% off if you sign up on an annualized basis. It's our newsletter here on the channel where we send a 20-page plus report out each month, generally around the first of the month. And we have our mid-month webinar where you guys can dive into the charts with me, ask me questions, and overall, I try to build the best offering I can, where if you guys like the content here in this channel, I think you guys will really like the dashboard as well. So if you want to, consider supporting the channel through that and getting some awesome additional content. But that's it for today's video. Have a great rest of your day, and I will see you guys right back here on Friday at 6 a.m. Eastern Standard Time. Take care, everyone.